Good morning, students. Welcome to Balaji Educare. Today we are going to start our another subject, that is business analysis and reporting. In my overview class, I had told you what all topics like sub-subjects we are going to study in this particular discipline paper. We have topics related to costing, cost and management accounting. We have few topics related to financial management. We have few topics related to risk management. We have few topics related to economics. So today we are going to start our first area of discussion, that is cost and management accounting. In this cost and management accounting, the very first thing we would discuss is what is costing, right? So the first point of discussion is costing. Now you have studied FAR. What is FAR? FAR is basically recording of business transactions, ascertaining net profit and net worth, and then communicating information to users, right? This is FAR. So when we have done financial accounting, we know what financial accounting basically deals with. Financial accounting basically deals with recording of business transactions, ascertaining net profit, how much profit the business organization has earned during the year, and what it is net worth. And why we calculate this net profit and ascertain the financial position? Because these informations are required by stakeholders, the different users of the business entity. Like we have government, the government is interested in knowing the net profit, accordingly the government will take tax, right? The creditors, they are interested in knowing whether the company is having sufficient current assets or not, so that their obligation can be repaid on time. The lenders, they are interested in knowing the profit earned by the organization, so accordingly they can recover their interest and principal on due dates. So we know what is the objective of financial accounting, and basically this is post-mortem. After the event has occurred, after the transaction has occurred, we are keeping a track record of inflow outflow of your different assets, keeping record of liabilities, expenses, incomes, and at year end we are ascertaining this net profit and preparing balance sheet and communicating this information to different stakeholders. This is what financial accounting is all about. But when I talk about cost accounting, right? This is financial accounting, FA. Now I am talking about cost accounting, cost and management accounting, BAR. In BAR we have few advanced topics of FAR also, right? So BAR is like combination of various subjects which we study in our undergraduation level. We study cost and management accounting, we study financial accounting, we study economics, we study financial management, we study risk management. Everything summed up, it's like few topics from here and there, and we create a subject, business analysis and reporting. So when I talk about costing, when I talk about cost accounting, what it is? This is like Once the transaction has occurred, I am just keeping a record of inflow outflow of goods, assets, money, cash. What are my total expenses, my incomes? Accordingly, at year end, I will do income minus expense, net profit. These informations are required by various stakeholders. Sir, what is cost accounting? So it's like financial accounting we do when? Almost at the end of the year. When we do this? When we do this? Year end. But the moment I talk about cost accounting, it deals with cost ascertainment. What is cost ascertainment? Cost of manufacturing a product or providing service. This is the objective of cost accounting. This pen through which I am writing, I purchased it at a cost of 5,000. So the person who has manufactured it has quoted me this 5,000 after he has sold me the goods or before giving the delivery? Obviously before giving the delivery, right? So this is Ankit. Ankit has purchased a pen. Ankit purchased a pen for say $100 from pen manufacturer. So to me, what is the cost I have paid? Means expenses incurred. For me, for Ankit, cost is $100. This subject applies to pen manufacturer. This pen manufacturer must calculate or must ascertain the cost of manufacturing this pen. So the cost of manufacturing this pen is $80. Plus 20 profit he needs in order to earn his livelihood. He also needs to take some money to home. क्या इसके घर में इसके बच्चे नहीं है? इसकी मां राह नहीं देख रही? Yes. He also needs something to eat. He is not running a not-for-profit organization. It's a profit organization who is doing this pen manufacturing business. So what after he ascertains cost, next step is to add profit. So he gets $100, which he quotes to Ankit. So the objective of this subject is to fixation of selling price. The objective of the subject is not only to calculate the cost of the product, the objective of the subject is also to calculate the selling price, which I can quote to the customer, accordingly receive order from customer. This price has to be quoted beforehand. Sir, I have got it. I have simply got it. this needs to be done at the beginning of the year, or rather when you're starting the business. Before that, this is sort of estimated and this is sort of actual. So if someone asks you, when do you do financial accounting? End of the year. When do you do cost accounting? Costing? Beginning of the year or beginning of the start of the business. So the main objective of cost accounting is to ascertain the cost of manufacturing the product or providing a service. Accordingly, you add your dose of hunger, the profit, you quote the selling price. So the objective is to calculate cost as well as fixation of selling price. FAR. We used to study from plus 2 level, class 11, 12. Graduation also I have done. Masters also I have done. 7 years. Cost accounting. This was there in my undergrads level. But at that point of time, something else was more interesting to me. Not learning this subject. Right? So this cost accounting purely works on estimated data. You have to estimate, okay fine, if I have to manufacture this pen, then what all components I will be requiring it. Accordingly, that component I am not manufacturing, I am purchasing from someone. That is known as the material cost. Now whoever will make this pen, he will take some kind of labor cost. And apart from material and labor, there are some other expenses also. Like I am using one machinery in order to produce this pen. So the depreciation of that. The place where I am manufacturing, that place is not owned by me, it is rented. So the rent which I am paying. Right? So in the very first level, what we have done, we have understood what is financial accounting and we have understood what is cost accounting. Now we will go into what is costing. Cost ascertainment. Costing means cost ascertainment, right? So when I talk about costing, it means cost ascertainment, right? So what was the cost? 80. How do I get this? How did I arrive at $80? Okay, so in order to manufacture this pen, there is material cost that comes to say 40. Then there are some laborers, they will charge $10, right? This pen is very costly. If you see in INR, it is coming to roughly 8,000, 9,000. Right? Okay. Apart from this, there are other expenses. And what comes under other expenses? We have depreciation of plant and machinery. Then we have rent of factory premises. Then there will be a supervisor salary, etc., etc. right? Is it fine? So apart from labor and material, all these expenses are commonly known as overheads. Right? Suppose this is say 10K. This is also 10K. This is also 10K. So the total other expenses is 30K. Now my question is, who will pay this 40 rupees? Customer. Costing means cost ascertainment. It also means cost to be recovered from customer. It means cost which we are including in order to calculate the selling price, because it is the selling price which the customer will pay me. So who will pay this 40 rupees? Customer. Who will pay this 10 rupees? Customer. So who will pay this 30,000 overheads? Obviously customer. इसका पैसा कौन देगा? Customer देगा. One customer is coming in Rolls Royce, right? So what you decide? During the month, we will be manufacturing thousands of pen. 1,000 pen I will manufacture. But this customer seems very rich. So let us decide entire 30,000 take from this customer. No. Not possible. He is not full. If you add entire 30,000 here, then the cost will be 30,050. Will he be able to pay? He has the paying capacity, but he knows what this price is actually worth. It means that this 30,000 you cannot take from a single customer. This is per unit. This is per unit, no problem. Depreciation, rent of factory premises, supervisor salary, other expenses are incurred as a whole for the month. These expenses are not incurred on per unit basis. So what you do? What you do? You include these costs, which means overhead cost. These are what? Overheads cost. On an average basis. Now how do you get that average? How do you get that average? Very simple. What is the total cost for the month? 30K. What is my expected product to be manufactured? 1,000 units. So what is my average cost? 30. So I am getting 80 plus 20. How I got 20? 25% on cost. 100 is my selling price. Material cost, no problem. I can easily include it. Labor cost, no problem. I can easily include it. How do I include other expenses, which is commonly known as overhead cost? because these are incurred as a whole. So the best way is to average out overhead cost among the production which you are doing. It is just like we two of us has went for a dinner. Let us split the bill. For 2, it is divided by 2. 3 of us, 4 of us, 5 of us, we went for a picnic. Divide among 50 persons. So the big organizations, the one which is variable, the one which varies on a unit basis, those costs are directly included in cost of the product. So material and labor, these are variable. So you include it directly. All other expenses are clubbed together, known as overheads. So how do you include overhead cost in cost of the product? On an average basis. Just you take total 30. This is my estimation. And what is my estimated production? 1000. So on an average, what is my cost? 30, 40, 10, 30, 80, 20%, 25% on cost. This is costing. This is costing. The word costing means cost ascertainment. The word costing means cost to be included in cost of the product. The word costing means the amount to be recovered from customer. Right? We can also say it as cost included in cost ascertainment. Right? Directly included. Directly included on an average basis. Is it fine? I hope things are very clear. This is how costing is done. Now what is happening? What is happening? Got order for 50 units. 50 units into 100. I took 5,000 from customer, manufactured the product and sold to customer. Again I got order for 120 units. Into 100, $12,000 I collected, manufactured. My principle is like this. First you give me 100, it is my business, my principle. All of you are studying here. No one's fees is due. Once you pay the fees, then the class has started. We work on 100% principal basis. 100% advance. This is our principle. So there are organizations who take 100% advance and then accordingly they will manufacture product and accordingly they will give you the delivery. Is it fine? So there are some information which is shown by financial accounting person. What is that information? This is your profit and loss account. Right? Just I am doing T format. Here I will take income. and here I will take expense. Output sold 950 units. So can anyone tell me what is my sales revenue? Total I have sold 950. Every unit sold, how much I took from customer? $100. So for 950, how much I got in my bank account? 95,000. Yes or no? Clear? Every time I have received sale price, accordingly I have started manufacturing. Yes or no? So for manufacturing 950, my cost incurred was 44. My estimation was 40. Once I have quoted you the selling price, you have given me 100 rupees. I am manufacturing the product. That time, price might change, but I cannot charge my customer for that. Slight 5-10% variation you have to bear. Yes or no? So there is 10% variation in my material cost. I cannot tell my customer. It could have been on the other side. Maybe I have procured material at 38. Right? Labor cost. This is how much? This is 41,800. And how much is labor? 950 into 9. Tell me what is net profit? $12,650 is the profit shown by the financial accounting person. Right? I am the person responsible for this particular performance. Board of directors, they called me. Mr. Patwari, let's have a cup of coffee in my office. Let's have a cup of coffee in my office. And I was like, today my job is gone. Why is it so? It is positive. This figure is positive. Why should I be worried? Why there is tension? Wonderful job I have done. Wonderful job. My results are in positive. But still I am worried. I am a bit tense today. My friends are asking me what happened to you. My colleagues are asking me. But today I am very tensed. And I am a cost accountant person. I know this figure is positive, but still I am not happy. I know why the directors have called me up. It is the shareholder who give responsibility to directors. Now director cannot do everything with his hands. So they keep managers, employees, like this. The hierarchy. I'll show you. So this is the board room. Different persons sitting. And there is a screen like we have in our boardroom. And this is me, manager. Right? So I can easily see on the screen that the two figures are flashing. 20, 12, 650. 20, 12, 650. 20, 12, 650. This is, everyone knows what it is. This is actual profit. What is this? What was our estimated production and sale? What was our estimated production? 1000 units. My estimation was 1000 units. See? This is what you estimated, right? Don't you? So as per estimation, what was this estimation? This was my estimated production oblique sale. Right? So this is budgeted profit. This is budgeted profit. This is budgeted profit. My dear friends, I have entered the boardroom. My legs are shaking. I am a bit tensed. Today I am finished. डर लग रहा है मुझको. And see, this type of rooms automatically creates a pressure situation. Directors are sitting on the screen. You have two figures flashing. Budgeted profit, actual profit. The manager enters. Why? What have you done? Leave now. These type of comments. Then my answers will come. I'm knowledgeable. In a sole proprietorship concern, it's one man show. It is me who looks after. It is me who looks after production, sales, procurement of raw material, managing the workforce, handling the finance, everything. Big organizations, very big organizations, it is decentralized. You will take care of production. You will procure raw material. You will look after finance. You will look after sales. Calm. It is the salesperson who could not sell 50 more units. Not my fault. So the profit which you are telling me, 20,000, I could have earned. No. Sales manager is responsible. There is loss of volume. There is what? Loss of volume. There is loss of sales. 1,000 was estimated, 950 I had sold. Go and ask sales manager. Go. You asking me why? Go. You must have watched some reels in Instagram, Facebook, where the employee is scolding the boss. Why I should be blamed? Is me who is handling everything? So 50 is due to that salesperson. So whatever difference you are seeing in profit is because of loss of volume. 50 units lost, sales lost. Per unit, what was the profit expected? 20. So 50 into 20 minus 1,000. So this is my revised budgeted profit. So from the total profit, you need to eliminate the volume part because this is not under my control. Go and talk to the salesperson. Another director. Okay, fine. Chalo, loss of volume eliminated. Now tell me, 19 and 12, 650. Bless her, listen. Who looks after procurement of material? Who is responsible for purchase of material? The purchase manager. I asked him. He gave me quotation of 40. Now, at what price he has purchased? 44. Is it my fault? So, increase in raw material price is not within my control. The procurement of material, had the material been lost in the production process? I would have accepted my mistake. You can see there is no wastage. There is no wastage. The input output yield is okay. It is the price difference. So what is the price difference? 40, 44. 4 rupees extra on 950. So due to material cost minus 3,800. It is because of me. I am the production manager. It is because of me. There is a saving in labor cost. I have motivated my workers to work efficiently. That is why they have produced in less time. That is why you can see a saving in labor cost. 9 rupees. Plus 950 due to savings in labor cost. So this 950 is due to savings in labor cost. This person out of them, still there is difference. Sir, I agree there is difference on account of overhead cost. First of all, how much estimate I have done? Overhead cost. This is estimated versus 32K actual. So here I have incurred 2K extra. Yes or no? Maybe there might be some other expenses which was not included at the time I was doing costing. Later I had to incur that. Like there is a list of overhead expenses, etc., etc. I missed some expenses. If I would have known about that expense at that time I was doing costing, then this total would have come 32. Then this average would have come 32. This would have come 82. Accordingly 25%, this would have been more than 100. The actual profit would have been more than this. This gap would have been less. So this estimation I have done wrong. There are some expenses which I missed to include. Number one. Number two, I estimated 1000. Volume was 950. Loss of volume 50. Sir, I could not sell 50. I lost profit 15 to 20. I could not sell 50. It means I could not recover this 30 on 50. Because I averaged it out on 1000. I assumed my sales and production will be 1000. Accordingly, I have taken this average. Had this been 950, this would have been more than 30. Again, same thing. So first of all, some expenses left out. Number two, while doing average, I took more units. That is why the average is less. So, $50 units into $30. That comes to, that comes to 1500. Due to overhead cost. So when I did costing, I assumed overhead cost on an average basis. I estimated my total overhead cost. I estimated my units. Accordingly, I got average. Accordingly, I got cost of the product. Accordingly, I added profit margin. Accordingly, my selling price came out. During the year, I will sell goods at 100. At year end, I will come to know the total. Will I come to know how much I will be able to sell? No, only at year end. That information will be given by finance person, the financial accounting person. Profits are positive, but I am worried. I have a board meeting with the board of directors. I am unable to stand properly. I am entering this room and I can see only two figures: budgeted profit and actual profit. Everyone is asking me, why, what, leave now, what are you doing? I explain them one by one. First of all, 1000 we estimated. Ultimately, 950 we achieved. It means there was no demand. So why would I produce? There is no point producing unless and until you have a demand. So go and ask sales manager, not me. It is not my duty. It is because of sales manager 50 less has been sold. If he would have given me order, I would have produced. He did not give me order, I did not produce. So on 50 units, at the rate $20 profit is earned less. Okay. So 19,000 is the revised profit. But what is my actual? 12,650. When I calculated my selling price, my material cost was 40. But the actual figure shows 44. So on every unit I am incurring 4 rupees extra. So on 950 I incurred 3800 extra. So this is due to material cost. But I am production manager. I motivated my worker. My workers have worked efficiently. They have produced the product in less time. That is why the labor cost is from 10 to 9. So 1 rupee I have saved. So on 950 units I have saved $950. This is due to savings in labor cost. So it is not deteriorating your profit, it is increasing your profit. With respect to other expenses, there are two blunders. Number one, when I estimated other expenses, it was 30. I left some other expenses. I did not include it at the time of calculating average, which came to my notice when I was doing production. So at that point of time, I cannot revise. So my estimation was 30, but actual cost incurred is 32. So this 2 extra is because of not included while doing costing. So this I have to bear. Next year we will be including it, no problem. And since there was loss of volume of 50, I could not sell 50. It means on 50 units, I could not recover the overhead cost. See, material I did not incur on 50, no need to recover. But fixed overhead I have incurred, na? Fixed overhead I have incurred. I averaged out and included in cost of the product. So I averaged on 1000, but the volume was 950. So due to loss of volume, I could not earn profit, as well as I could not recover the fixed cost, the overhead cost. On 50, I did not recover this 30, the average. So 1500 plus 2000, 3500. The analysis which I have done today, this is known as variance analysis. This report is known as variance analysis report. This is variance analysis report. So the variance analysis, I need costing data, I need financial accounting data. Accordingly, I can compare. Right? So what is cost accounting? Costing, fixation of selling price, later part of the year doing this variance analysis. Anyone can ask you what you studied today. It's very easy. Financial accounting, it's postmortem. Cost accounting starts at the beginning, before the beginning of the year. We need to find out what is the cost of manufacturing a product. We need to find out what is the cost of providing a service. Accordingly, we can fix the selling price. Now, when I calculate the cost of manufacturing product, there will be material cost, which will vary on per unit basis. So I will directly include in cost of the product. There will be labor cost, which again it will vary on per unit basis. So I will directly include in cost of the product. Apart from material and labor, there are other expenses which are commonly known as overheads. These are generally fixed in nature. Again, these costs also needs to be recovered, but it cannot be directly included. So I have to include it on an average basis. For this, I need the total overhead cost as well as estimated production. So I got average 30. So accordingly, I got cost 80. Add profit margin, got the selling price. Then at the end of the year, financial accounting person will tell me a figure that this much we have earned. And then we will reconcile the budgeted profit with the actual profit and do this variance analysis. This budgeted profit is on 1000, but actually I have sold 950. So there is loss of volume. The difference between budgeted profit and actual profit is because of material cost. 4 rupees increase. There are savings also in labor cost. 950. And there is overhead cost difference. So this is MCV material cost variance, this is labor cost variance, this is overhead cost variance. The difference. How much was my cost? How much I have actually incurred? Right? So that's it from today. Go home, revise these topics, and in the next session, we'll be back again with some interesting topics of costing. Thank you.